Hi, I'm Reemil Barri, Research Analyst with SECO. Given the plethora of IPOs in the GCC since 2021, in this podcast we briefly cover the top 5 critical aspects to focus on for investors looking to subscribe at any IPO. With me, we have Nishit Takotia, Head of Research at SECO, sharing his thoughts.
Thanks, Reem. For any IPO, we are usually flooded with a lot of data through the prospectus, along with media bites and sales pitch by the lead manager. Accordingly, it is important to focus on 5 things before one decides whether to invest in an IPO or not. Number one, why is the IPO taking place? More often than not, company does not benefit from much from the IPO as the proceeds go to the selling shareholders. In fact, for the company being listed means there will be more regulatory oversight, reporting requirements, corporate governance changes, etc. So it is important to understand why the IPO is happening and if the company is going to benefit from the funds, or it is just an opportunity for outside institutional investors and public at large to invest in the company. Either ways, IPOs are good for the capital markets, but focus on the use of proceeds is important aspect to scrutinize. This makes me come to the second important factor to consider, which is finance cost and capital structure. It is not uncommon to see that before the IPO, the company pays a significant one-off dividend to its founding shareholders. This is fine as the money in the company belongs to them and they want to upstream the same before getting the minority investors into the firm. However, this can even imply post-listing that the company has a completely different capital structure. It is more leveraged. So the important aspect is to check whether the current impact of this leverage is it visible in the numbers or the numbers will be very different going forward. There will be a drag from interest expense or not. Especially given the spike in interest rates, this is becoming much more important currently. The third important aspect is earnings track record and cash flows. Like analyzing any company, focus on multiple years of earnings and consistency of cash flows is really important. Many times companies do an IPO immediately after a strong year. This could be due to some anomaly or even cyclicality of business. In addition, it is important that we adjust for any non-recurring one-offs, provision reversals, which again can be at the discretion of the management, possibly to increase earnings. In general, cash flow remains the most important statement, and scrutinizing the way the company generates consistent, stable cash through the years is important, especially in this region, where most IPOs are guaranteeing certain dividend commitment to attract investors. Fourth point will be the investment theme. Are you investing in the company for growth or yield? If the company is a growth story, how is the growth being funded? Is the IPO proceeds coming in the company, or the company plans to leverage and the proceeds are going only to the selling shareholders? How has the past growth been? Organic or through M&A? Is there any history of goodwill impairments? Similarly, regarding dividend commitments, focus on the ability to meet the commitment, or is the company leveraging to pay dividends in order to attract investors and create a yield story? Accordingly, decide if the valuation story is compelling and check whether the multiple other peers are trading at before deciding whether to invest or not in this IPO. Ideally, any good IPO should leave some upside to minority shareholders on valuation. But it is not uncommon to see companies trying to list at premium valuation and then creating a narrative on growth or unrealistic dividends to justify those valuations. Finally, the fifth aspect would be the management profile. The background, experience, and tenure of key management personnel with the company doing the offering is really important to look at. There are times when totally new set of team could be brought in just before the company is going public. Whatever be the case, management track record and proven ability goes a long way in determining if the company deserves premium valuations or not.
Thank you for your review on the key things to look out for when investing in new IPOs. We hope our listeners found this discussion insightful.